Hi, this is Zak Mir, editor of Spreadbet Magazine, with a look at some bulletin board hero stocks amongst private investors on Tuesday, July the 1st. And I'm starting off with Quindell, where even though the company doesn't want to speak to anybody, including me, there is a charting opportunity in terms of the daily time frame. Here we've got an obscure line of support, as I've drawn here, from May last year, running through around the £2 level. We've got a higher low in the end of June as well. And to start July, really, we've got a end of day close at the 10-day moving average at £2.30. The situation now is that one would expect the shares to try and break this line of resistance from May, just above current levels. If it can do that, then one would expect to see progress towards the 50-day moving average at £2.98 as a best case scenario target over the next 2 to 4 weeks. The stop loss, obviously, the May support line from last year, £2. If you're cautious on the stock, you wait for the RSI now at 43 to get back above 50, and then take the punch on the long side. But it does look as though with a higher low for the end of last month, we are actually looking in a positive way here. Moving along to Rose Petroleum, a smaller company, obviously. Here we've seen sort of quite sharp consolidation with a double retest of the 50-day moving average at 1.69 pence, and then the consolidation again above the 10-day moving average at 2.19 pence. Ideally, we'd like to see that 10-day line hold over the course of Tuesday and the rest of the week, and possibly the best scenario here would be an end of day close above the 20-day moving average at 2.55 pence as the buy trigger for people to go long, on the expectation that there'll be a retest of the June peak, but by the end of July at 4 pence. Finishing off with UK oil and gas, and here we can see that also that there's been something of a wobble, a consolidation within a bull flag above the 10-day moving average at 1.06 pence. These sorts of up-down days within the flag are quite typical. Shares are relatively overbought, but there looks to be RSI support around the 70 level, which is encouraging. And really, one would be looking for at least a retest of the 1.63 pence resistance of last week to come in over the course of this week. Best case scenario probably at this stage is a target towards 2 pence, which would be the a line drawn in that way, as sort of broadening triangle to happen over the next month or so. At this stage, only really well below 1 pence would actually delay the upside scenario. That's it for me. More updates on spreadbetmagazine.com.